Well, good morning everybody. Welcome to Stockradar Stocks in the Move for another week. Today's day is the 9th of November 2023. My name is Richard Lee and I made the stockradar.com.au website for you. Okay, are you wondering why some trade plans work and some don't? It was a very simple answer. In this week's Trading Tactics I explain the why, and in the Radar newsletter this month I expand on those essential requirements that make it work, so you have a full understanding of what is required. Great starting point. So I'm going to recap a few things in the Trading Tactics later on and expand on the newsletter at the end of the month. An observation for you. There are many stocks moving down to the opposite opportunity zone. They've been sold off incredibly badly, yet the ASX 200 is near its highs. Question, which one do you listen to? Okay, that's just something for you to have a little think about. I also note at the moment the market, generally everyone I speak to is incredibly bearish at the moment, which may well be true, but the market is still at high levels. Lots of stocks have been sold off, but again, when everybody's very bearish, the consensus is obviously often wrong. So we can have a little think about that one too. Anyways, lots of things for us to think about. In the end, I follow the charts, I follow price, and that tells me what to do. I don't predict, I just follow. So I'm going to try and give you a bit of an example of how I work today. Okay, so let's go straight into the top 10 for this week. Again, we don't have a lot of stock picks on the table, as you know. Nothing much has changed this week, but here's our top 10, and some of them are performing pretty well, and Stockradar is one that has recovered quite well this week. Magellan Global Fund, we've got a bit of corporate activity there. Fang, Panel, and you can see Promedicus has recovered again this week. A couple of stocks have recovered this week, so a bit of a rally overseas. We'll have a look at that in a second. There's a little bit of a levitation on our market here. Whether that lasts, we'll have to wait and see. But there's your top 10 of this week. Not a lot of change, but that's how it looks at the moment. So now we're going to get straight into the overseas markets and have a look and see what they've done. It's been an interesting week this week because we did have a good recovery last week. So this week we sort of marked time, but it was a very sharp rally last week, but it really didn't put much of a dent in the whole downward move we've seen from those highs, from that lower high on the Dow Jones there to where we've got to S1 down here. We've had a rally, short and sharp, reasonably good volume, but really hasn't made a big dent on this downward push at the moment, and we still have made no big dent on the main game, which is the ultimate highs for our market, the S&P, the Nasdaq, and the ASX 200. We are still below that level there, so that's the real level we need to get through. For the moment, we're just rotating around in very, very uncertain fashion, and the Dow is showing us exactly that, where it's come down for quite a few months, and all of a sudden decides to want to go up again. So whether it continues on, I don't know. I doubt very much it will do. S1 is probably going to be tested again, but it just continues this pattern of uncertainty. And even on the volume side of things, we look at the S&P. It's a similar situation. Volumes have been quite high there. You saw some big buying and that move up last week. Also some big selling. So there's really is two-way business going on here on these markets. It really doesn't really give us an idea of what the medium-term trend might be. Okay, so that's the S&P. Nasdaq again. It's come off a little bit here. We saw a bit of a rally here. It's recovered a bit, but again, we're sort of a good look at R1 and R2 as the main levels to get through. This is all sort of just real detail at the moment and really not much to give us an idea of what the trends are going to be in the future. Okay, so that's the indices at the moment. They're marking time in very unsure fashion. Copper continues down. It has been going down for a long time now and is really struggling to pick at any rallies at the moment. Even with this volume here we saw down here this last couple of weeks, it's still been quite negative, it's still holding this downtrend and not much price advance there. So that's really disappointing. Gold's disappointing us again. It's struggling at the 2,000 level again. Even though we had some good volume there to push at it hard, the sellers still prevail. And, it may have a lot to do with the US dollar as well, of course. But it still can't get through there at this stage. So gold is still a no-no. And Brent crude has taken a little bit of a tumble here. Now, it hasn't really been able to, expand on this rally that we saw from mid this year. And it's now starting to fall down and make a new low here this week. I mean, the week's not finished yet, so we still have some time to go. But it certainly looks like it's struggling at the moment. Some reasonable volume there. Even all this constructive pattern that was emerging here now seems to be unravelling a little bit. So crude is always a very, very difficult thing to pick. It's always does things that it does its own thing most of the time, and it's very hard to work out where it's going to head. But for the moment, it tried to eke out a rally. It probably corrected about 50% of the downward move. And so it's failed there, so really that can still be considered a correction to the downtrend, and we're going to resume the downward trend for the moment. So that's what it's looking like at the moment for Brent crude. Okay, hold your fire on the oil stocks. Okay, now our market, the ASX 200, is really again still sitting in this range here. We saw a breakdown last week, or a couple of weeks ago, below this level here of 6898, but certainly has recovered it again all of a sudden. Negative, still negative in the momentum side. It's below the average. We've got these high lows here. So really, until we break through up here, we really can't get too positive about the market. Even though I says everybody is bearish, which is always a bad sign, always a good sign for the bulls, I would think, because the consensus is normally wrong. But still, I need the evidence, and that's not backed up by the evidence at this stage. It's just a feeling, and that doesn't really cut it when we're trying to trade. So we really need some hard evidence to this market getting through these highs, and at the moment we're still a long way off, a good 100 points or so off those highs, so we'll have to be patient and wait for a bit more evidence to see what happens there. Okay, so that's the ASX 200. We go to the stock pick count now, and it really hasn't changed since last week. Flat at 20. We've got 12 stock picks, 12 stocks out of 161 stocks, which is not really good considering the ASX 200 near its highs. We've got 8 ETF picks at the moment. You have to go to Stockradar to find out what they are, but there's still eight of those there. So that's the stock pick count at the moment. If we look at the portfolios at this stage, still marking time really conservative. We've lost quite a few stocks here recently, so this is not a good sign. So we've got a conservative here of 2 out of 10 now. So a lot of these leaders are really not doing much at all. So it's well down there. The Energizer 5 stock is now 2 out of 5. Very bearish view, 15.4%. We've got the Energizer 5 out of 10. The Energizer 10 stock is 5 out of 10. So they're your main stocks that we've been running for 20 years, and over that time period, the accumulation index is up 8.4. So all of them have outperformed it, and that's a good thing. The ones down the bottom here have really been through this time of the last couple of years where it's been very, very difficult to make any money. The Energizer 5 stock started in August 20, is down to 1 stock out of 5. The Energizer 5 stock started in March 21, is down to 2 out of 5. So we're all pretty negative here, and we're just holding a bit above water there on the returns front, and it really has been a very difficult period, as we all know. And I can see there's some distinct disillusionment over the market at the moment about stocks and about the future of the market, things like that, which is not a good thing, but it all builds that case that perhaps things are overly bearish at the moment. So that's where the market is. That's where the stock picks are at this stage. So now let's get into a couple of stocks and see what we can find out today. Okay, so stocks. We covered we did the miners last week, and we had a good look at those, and they're looking, the promising side of the market, I think, at the moment, and we'll have a look at a couple of them today. But Fortescue and Rio both poked their nose above resistance and looked pretty interesting last week. S32 we're going to look at later on. It's not doing anything, and I think next week we might even look at some of these REITs. They're getting near some major lows at the moment, and it's starting to look pretty interesting after having a bit of a rally, which really just petered out in the end, and they all came back to their lows again. But maybe there's some opportunities there back at these lows. So there's a lot. I've got a big list of key lows at the moment that a lot of stocks are down on at the moment. So there's plenty of stocks worth looking at, worth observing, worth watching for a rally to unfold. So, but for the moment, we're going to go through the stocks that I've got today, which I'm going to start off with a couple of leaders. Firstly, Aristocrat. Aristocrat really has sort of, it's been trying to rally there. There's been some good news about it. The last week or two, it's come off this lows here at S1. It's doing quite well. Volume's been pretty middling. Momentum is still positive. I mean, the whole thing is still positive. A trend intensity rating at +7, but it's really working pretty hard to get any gains going at the moment. So we'll be patient with our Aristocrat. It's a good stock. It is going up. It does have a qualified trend. So we'll hang on to that with a trend intensity rating of +7. That's one of the stocks we do have. One of the stocks that has come down and found a bit of a low point, which is looking interesting because the last 2 weeks we have seen a good lift off there, is Telstra. So at 380 or 377, I think the lows are, in fact. It's held here a couple of times. We've seen some good volume come through here, which is always a good sign of a bottom. Even though these red bars are big, it also means there are buyers buying the stock. So, and as the price hasn't really come down a bit, that's not a bad sign. So it looks like we might try and have a bit of a rally and try the upside here on Telstra and see if we can get some sort of rally. But again, the main game really is up around here. We've got a trading range pattern here, and we know how uncertain the trading that can lead to, especially when we look at the ASX 200 over the last couple of years. We think it's going to go, then it fails. We think it's going to drop, then it doesn't. It just keeps frustrating us to hell. So Telstra may be the same. While stocks are in trading ranges, look at CSL for the last 3 years. While they're in those trading ranges, it's very, very hard to eke at a medium-term trend, which I'm looking for, a momentum trend, which I look for. So I need to get those breakouts. So very conservative what I do, but I try and put the odds in my favour. And while it stays in this range, they're not really in my favour, very much 50-50. Potentially a rally from here, but not a really great case. Trend intensity rating is still -7 there. So, we've got to temper our enthusiasm sometimes with a little bit of reality. So a bit of hope down here, and we'll see if we get a rally and something constructive may unfold. It may not. We'll have to wait and see. Fortescue, as I said before, we saw a couple of these stocks just poke their nose through resistance. We looked at Fortescue last week. Trend intensity rating has improved a little bit. This is a promising sign. There's quite a few highs across here, which is now broken above, which is a good sign. That's the first step. For me, I really need the old highs to be taken out up around R2 before I really can be confident that we're going to get a rally. So we may get a push towards R2, but I'd really like to see it through there. So that's really what the picture is for Fortescue. A little bit of volume here. Momentum's just poking its nose above zero, so it's sort of tentative, but we really just have to be a bit careful about getting too enthusiastic about some of these stocks. So I'm going to wait until a new high is broken there for sure. ANZ, a similar picture where it's also sort of now testing some resistance here. A bit like Fortescue, we've got the main high up here, but then we've also, it's not an all-time high, but it is a big high. Then we've got a few highs here, 1, 2, 3, 4, 5 times it's sort of tested this area, and it's keeps coming back. Let me just get all this in place so you can see what I've got here. There we go. ANZ trend intensity rating of 0, and that's probably right because it's going sideways and has done for a while. It will be encouraging above here, but for the moment we've got, even if it does break R1, there's a big resistance area here, big congestion area here, so it's going to be a bit of trouble up here. And we've got a stalemate down here. So there's little trend behaviour, so growth may remain elusive and temporary. So I can't give you much more at the moment than that. I don't want to promise things that I can't deliver, or promise things that the market can't deliver, I should say. So we just said to watch ANZ, and there's a bit of levitation, and we'll have a look at a bit of Westpac later on to see how it's gone after its result. But ANZ's struggling, and certainly there is certainly some heavy selling there. And if it does get through there, it may well get towards up there. But we'll just have to be, again, patient. We are in a bit of a trading range pattern at the moment, and we're right sort of in the middle of it pretty well at this stage. So ANZ rating, a trend intensity rating of 0. Okay, key low. This is on my key low list. This one here, IDP Education. It's found some good support down at S1, and it's around about $21, $22. We've found some good support. We've noted the volume of the last couple of weeks, which we'd like to see on those lows there, and we're now seeing a rally unfold. So there's nothing really fantastic about it, apart from it's going to test the sellers and see where they are at the moment. And the sellers can probably hit this market all the way up to here before we'd even look for a rally up to R1. So this area here is still building evidence, really, as to trying to get some sort of pattern here. IDP Education, a good stock, a good pedigree there. Everyone's quite positive about it, but it has come down from $40 to 20, so it's down a kilo. It's corrected 50%. So interesting zone. We just need to get that, build that evidence really that says this is going to turn and a trend is going to develop. And as you can see there ain't no trend developing at the moment. So we just have to build on this case. Trend intensity rating is still -8, which puts the reversal in the very early stages if there is going to be a reversal. Okay, so that's IDP Education. Keep an eye on that one. ARB, it just won't go away. I keep watching this stock, thinking it's going to go through the roof, and it just doesn't really do anything. And then it fails, it comes back again. But here we are again, having another rally with the market, with a lot of stocks the last couple of weeks, with Telstra, with all these stocks that have rallied a bit. So, but really, again, we look for this area up here to be broken, which is up around $33, $34. Plenty of selling down here, which was absorbed pretty well. This is flat, so really we've got a trend intensity rating of -1. This has slowly moved to neutral as a reversal develops, but still not yet. So look at IDP is right in the early stages, whereas a stock like ARB is probably in the latter stages of a reversal. It's corrected 50%. It's now making a reversal pattern down the bottom construction. We've got accumulation, downtrend accumulation, and we're starting to develop a little bit of a trend reversal structure here of higher lows, which is very, very promising indeed. So again, two-way traffic on the volume. This is pretty flat. ARB, well, we just need a bit more price advantage yet to convince us anything's going to happen there. Okay, now 9, entertainment. It's always fascinated me a bit because it just does seem to sort of work very clearly in the patterns of the market of uptrend, distribution, downtrend, accumulation, uptrend, this sort of thing. So we've seen this happen before, accumulation, uptrend, distribution, downtrend. Now we've got the accumulation phase. Now guess what happens after that? Well, the uptrend occurs. But it's been taking a long time. So we're now back testing this low again. The good thing is it's held and it's bounced off there pretty quickly. So again, we're still in this situation. We've got a trend intensity rating of -7, so we're still a way down the track here. We really need some advances on there to encourage us. But we just have to be patient and wait for this R1 to go, because that's the level that will trigger a new uptrend if there's going to be one. So whether it happens next month, next January, or next February, next June, I don't know. But that's what it looks like at the moment. So that's the one you just keep in your watch file and wait for things to happen there. Magellan, I mentioned before. A couple of clients have rung me about Magellan, looking at all the outflows by the big Magellan. But this is a fund within Magellan which is actually doing very well. Why is that so? Well, I think it's more a bit of corporate activity from a guy called Nick Bolton. For those who know him, he's been around for a while, a bit of a corporate strategist, a bit of a player. And there's a few players involved in this one here, and the price is going up. So again, it's a situation where I don't really know what's going to happen with the corporate strategists and what their plays are going to be. All I can look at is price. If anyone's nervous, you can always sell their stock. You've probably got a profit in there, or you can just tighten your stop, whichever way you like. I tend to tighten my stop in these situations to try and make sure I lock in what I have. We got in well down here, down around 150. It's now up around nearly 180. So that's quite good for us. Trend intensity rating is 10. It's above the average. Volume is good. Momentum is good. So, the price can still go higher. And if you are right at all, you just tighten your stop. I just follow the price higher with a tightened stop. Okay, so that's Magellan Global Fund, one we are making a little bit of money on, which is good. Technology one, another one that sort of interests me a bit. We've all sort of, whether it's love-hate relationship, I don't really know, but it's been a very good growth stock for quite some time. It's one of the original technology stocks. It's had a few permutations, but it's actually doing pretty well. But I just really wanted to recap on what's happening at the moment. Remember, I'm a person who tries to take a chunk of trend. I'm not a long-term player. I don't look for long-term trends. So if you're looking for me to give you an idea where technology one's going to be a year down the track, I don't know, and most people don't really know the truth of that either. So all I try and do is follow the current price action, and that tells me if it's in a trend. If it's in a trend, I'll jump on it. Okay, when the trend stops, I jump off, which is my stop. So in this situation, we recently had a trend above $12, which we bought, a little trend reversal pattern here. Then our stop went off up here, up around just above $15. So that was a reasonable trade there. That was just a chunk of trend, and that little trending move has now stopped, and it's going sideways. Now, when a trending move stops, it can go sideways, or it can go down, or it can go back up again. At this stage, it's not gone down or gone up, it's gone sideways. So it hasn't really broken down. My stop's gone off, yes, hasn't really broken down, but we've seen some really constructive patterns here. It's sort of what I call boxing here, but like a Davis box, where we sort of look for this levels here to give us an idea of where support. Now, Nick Davis, what he would do, if it holds this level 3 times, he would buy it again. Or if it breaks above here, he would buy it again. So it's an interesting situation there as to how you play these things, how aggressive you are. In my situation, I'll wait for this to break up there. But it's looking constructive because we are going sideways. There's some selling here, clearly. Some buying down here. We're a bit locked in there. We've got some two-way volume. As we go sideways, this will draw towards zero. If we continue to go sideways, this will just run along the zero line completely. So we're just drawing back there at the moment. So it's in a corrective phase. As I say, it's trying to box, it's trying to consolidate. Quite like the idea of these little supports occurring there, which gives me a feeling of consolidation. So I will then be waiting for this to break up here. So that would suggest to me that we're getting another trending phase if that happens, okay? So that's what technology one is, and that's a little bit about my strategy and how it works. So don't look for me to sort of give you an idea of where stock's going to be a year down the track, because I don't know. I don't do those things. Okay, so that's technology one. That's what I believe there. Okay, Atlas Arteria. Now, just going to say regarding the new highs there, we've got a few prospects on there, and there's one big retail stock that I'm looking at the moment. There's also looking very, very interesting and may well be about to make some new highs there. So you have to go to Stockradar to find out who that is, but it could be quite a good opportunity because it's been very, very resilient, this retail stock. And I think it offers some great prospects because there will be some stocks, because of course there are some stocks going up. And this is Atlas Arteria, which, it had its trouble up here, then it just came back, awfully back down a long way, and it's now come back down to this S1 area, which is a big support area. This is your big resistance at $8.50, your big support down at $5. So we've had a healthy correction. Trend intensity rating is still -7 at this stage, but we have to start the process from somewhere. Okay, so what a good point to start at. Was supported before at S1 here, right down at $5. Interesting, we've got a rally the last couple of days. Again, it's been a bit of a market rally. No real volume here. This is still weak. So very, very early stages for Atlas Arteria, and a lot of stocks are doing this. They're coming down here. They're getting to previous support levels, and what we're looking for is that evidence of the turn, a bit of volume to pick up. And you can see there's been a couple of days here, a couple of green bars here. And they're a bit early on, up around here, but still they are buying, and that's a good sign. Volume generally has been heightened here a little bit, which is a good sign. This is still weak, although maybe starting to just flatten off a little bit. So Atlas Arteria down around $5 is probably worth pursuing and keeping an eye on as to the possibility you might get a rally out of there at some stage. Okay, the other one a bit similar is APA Group, which has come down a long way and found support at $8. Not that it's knocking the lights out right at the moment, but it has found support there. And so here we go, starting our proposition of looking for a reversal pattern. So APA Group was $12 mid last year. It's now $8, so it's come off quite a way. It's come down here. We've got some heightened volume here, which means we've got some good support appearing. I just blow that, so you can see some really good support appearing across here. Again, even red bars, even if they're high, it still means that buyers are buying stock as well as selling stock. And if the price isn't going down, that's a good sign. I know I keep repeating that, but that is the way it works. So now we get a couple of green bars pushing the price up, which is an even better sign. So it still looks very early stages for me. I'm a weekly trader. I let things develop. Things have to change considerably. Trend intensity rating of -7. Has to change quite a lot before we get too excited. So often turning point from significant lows such as this. So this can often be a turning point. 1, 2, 3, 4 tests there. Okay, and it looks possibility. This is still very weak, and the volume looks interesting there. We're well away from the average. So an interesting infrastructure stock which has had a big sell-off of late. Okay, now two stocks I did promise I'd have a quick look at for you. One is Westpac, post the result. Now we've got a big downtrend here. You can see from all the way up from $40, $40 there. Come all the way down here. We've got a very, very clear line here that is still holding below. Still. Okay, so if we just look across here now, this is what we've got. We've got the downtrend from the highs at $40, which is still very much intact. Lower lows. We have on a longer term basis a higher support here. Okay, so while we will still remain here, we do have a high, which is a good sign, and it is holding. Okay, now this week we had a report from Westpac, which wasn't a bad report. They listed the dividend. Things look sort of quietly constructive there. And the market had a rally and then it came back again. So a bit frustrating, and that's the way the market is at the moment. It frustrates us, it tests us, it challenges us all the time, but not a lot there from Westpac, I'm afraid. Nothing on the volume front, nothing on the moving average front, nothing on the momentum front. Trend intensity rating is still -8 for Westpac. There may be things developing there, but for most of those stocks like CBA is in a trading range. ANZ sits below that big high we talked at before. Westpac's in this big downtrend line, and NAB is also still struggling at the moment. I know it's reported today, a fairly good report, I think, but I'm not too sure what. I don't even think the market's even open yet, or it's just opening now. So that's the banks. They're still a little bit unsure what they're doing at this stage. So this is really the zone I'm looking for Westpac. This whole moving average downtrend and horizontal resistance line here. If it got through there, I might be getting quite encouraged again, especially if this moves up into qualifying levels. So we just have to wait. 2-year stalemate we've got here. This is a switch zone. Keep an eye on that zone. But at this stage, it doesn't really look like it's going to give it any real challenge for now. Okay, now we did look at one, we went through the miners last week, of course, which is always an interesting exercise, and we did look at one miner which had come off an awful long way, wasn't up near its highs like BHP, Rio, Fortescue, Capricorn, CIA, all those stocks. This one here's come down a long way, and I sort of looked at this last week, thought maybe this area around here might be an area of support. But unfortunately, this week it's just fallen straight back through there. So we go through the process of building this case for a trend reversal, and if it doesn't happen, nothing happens. We're neutral. We're out of it. There's nothing really we can do. We just let it fall further, and that's what we're doing with South 32. So it's not going as we needed to build a reversal. So we stay neutral, no damage. Let's let it flop down, and we'll get some opportunity to buy this at a lot cheaper level. So it's come down from about 530. It's now 311 and falling. So that's not a bad thing for us. So that's really where we are with S32. We did see some volumes pick up here. Selling was being absorbed, but again, it'll be interesting to see what this move down this week has in volume, but it's certainly struggling South 32. So didn't really do it for us, okay, unfortunately. So there we go. All right, so they're the stocks I got for today. Been a bit of interest there. Some falling flat, some not. Some looking a bit encouraging. Some got a long way to go. But there's some things for you to think about, and just trying to help you. Try and fine tune your trade plan, understand what you're doing, why you're doing it. So what I'm going to get now is I'm just going to go through trading tactics. Let's talk a little bit about the trade plan, and I'm going to expand in the newsletter later on some of this little brief run through I'm going to give you right now. So firstly, what makes a trade plan tick? We have a trade plan. Well, maybe we have a trade plan, maybe we don't. That's the big question. So one, a trade plan. What makes a trade plan tick? The fact that you actually have a trade plan, not pretend trade plan, a real trade plan, okay? So one that you actually follow, tells you what to do. The second one is the discipline to enact that trade plan. Can you enact the trade plan, or do your emotions overtake you sometimes when you've got a signal for BHP that says you buy, say, no, I'm not going to buy it this week, I'm going to wait. Or if your stop goes off, I think I'll wait another week, and of course it falls further, and you get across with yourself, and the funny thing is we often make these same mistakes over and over again. So it's so important to have a trade plan that locks in those decisions for you and makes them for you, because they're the right decisions to make, not the emotional ones, okay? So what makes a trade plan tick? Actually having the trade plan itself, a real trade plan, and having the discipline to follow it, okay? So what makes a trade plan work? Do you really have a trade plan that answers all your trading questions? Not just your trading rules that tells you when to buy and when to sell, but all the other encompassing things. Which stocks are you going to cover? How many stocks are you going to hold? Which sectors are you going to get involved in? Which stock sectors you aren't? There's all these things that you ask yourself questions about, and you subjectively make these decisions on the run, which is bad because you make inconsistent decisions, which breeds inconsistent results. So it's really important that you have a trade plan that answers all your questions as to what you're going to do, and that you adhere to them, because if you don't adhere to them, there's no point in having a trade plan. Okay, so as I said before, you have to have the discipline to follow it, and that's probably one of the biggest failings that I come across in my business of the last 30, 40 years, of people having a trade plan but not being able to follow it, or just the emotions gets the better of them, and they say, no, I can't, whatever. And it's really a matter of saying, well, this is what it says, so this is what I do. Okay, so that's how it works. Okay, so what are those trade plan essentials? Are the things that I talked about, okay? So there are things like analysis, which we know about. Now, the analysis probably takes up 10% of my time. Okay, that's about it. The rest is all my trade plan rules, understanding all these other things. I go into trading rules, the trade plan rules. Okay, as I said before, there's trading rules about the buy and sell signals. Trade plan rules are the stocks you cover, the sectors you cover, all these things, all these other questions you've got to ask. Are you going to work in the market cap? Which market cap sector are you going to work? All these different questions. Are you going to buy small stocks and big stocks? there's lots of questions you need to answer. Okay, so that's really what the trade plan rules are, and you're going to have them all written down so you know when you make a trade. No, 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 yes, yes, whatever. Okay, all right. Just another thing in my trading plan rules, the way I've designed the trend intensity index, which I went through for quite a few weeks not long ago. There is only one outcome on my indicators at any point in time, so there's no confusion as to well, is it or isn't it not. So you've got to have these answers that are yes no answers, otherwise you're in that subjective grey area again. So the trading rules must be very clear and very succinct, as your trade plan rules must also be very clear and very succinct. Okay, having an understanding of psychology, a little bit about what drives the market, a bit about understanding greed and fear, how we should be selling greed and buying fear. And that's really about getting over your emotional side of things and, putting those emotions in the background and looking at the market for what it is. Okay, so a bit of psychology is always a bit of a hand when you're doing this sort of thing. Okay, the other thing is you need to know what your biases are. Everybody has biases, and these are the things, if we don't know them, we will keep repeating over and over and over again. Information bias, reading stuff that you like to hear, not stuff you don't like to hear. Anchor bias, stocks you've made money on before, not stocks you've lost money on before. All these biases that we have, which are bad for trading, because they make things very subjective, make things very biased, which is all bad. So you've really got to know what your biases are and eradicate them, because they will continue to appear and will continue to thwart your trading results. Okay, the final thing is you are the driver of the car. Okay, so the car won't move unless you drive it, unless you change gears, unless you steer it. So it's really a matter of you driving this trade plan to make it work. So you are the person that has to make it work. So the trade plan is there, but it won't work unless you drive it properly. Okay, so that's just a little bit about trade plans. I will fill in a lot of the gaps for you in the newsletter at the end of the week, but it's like simple steps we go through just to build our trade plan up, and then we have it there. Then we know exactly what to do at any point in time, whatever the market delivers us. Okay, so that is really important. Okay, so things like stock selection and making it work is all really important when we're trading, and not to make those same mistakes over and over again. And I'm sure people are pretty well aware of that, and I hear it all the time. Okay, so that's really most things I've got for today. What's that? Well, the monthly newsletter, we detail the broad trade plan components we outlined today. We fill in the rules, the questions, the processes, and all this can be used as a template for building your own trade plan ideas. It will give you a structure of essentials to work with, and you fill in the rest. You'll find that every good trader has common things that he works with, like knowing what he's going to buy, knowing why he's going to buy, where his stops are, all these things that are really common to money management, really common to a trade plan. No matter what they do, fundamental, technical, short-term, long-term, whatever, there are some basics that are always there, and that's what I go over in the newsletter. Okay, so you are the person that's key to the trade plan. Don't forget that. You are the person, so you have to make yourself a better person to be able to drive that trade plan. And I know if you are making those mistakes, you may as well give it up and go away, because all you can do is lose money. Okay, so make the change and make some money. That's how you do it. Okay, so trade plan without a good driver doesn't work, which you may have found out already. So follow us on Stockradar to watch the strict implementation of the trade plans and trading rules. What my members are my discipline. So if I make a mistake, my members will ring me up and say, "What are you doing?" So I've got a discipline that says to me, I've got to follow these rules. So it's a matter of whether it's your wife or a mentor or whatever it is, having somebody that says to you, "What the hell are you doing? Why are you doing that?" You've got to be answerable, because you can't work as an island in these situations. In most cases, it's always very, very hard to do. Okay, so what is your discipline? Okay, so have a little think about that. Okay, so stay safe, respect your trends, heed your stops. Give me a call if you need a hand, and I'll see you all next week. Thanks very much.